Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, May 26th. Hope you guys had a nice long weekend here for Memorial. Hope you guys enjoyed your Memorial Day weekend. Hey, just wanted to touch base with you. We got quite a few economic news releases to go over today. And we'll start off with the durable goods orders for the month of April. So back in March, we had a 5.1% increase, a pretty big spike there for the month of March. But as you can see, we hit forecast, which is not a good thing, which was negative 0.5%. So durable goods orders had a pretty significant drop from 5.1%, 1% to a 0.5% drop. Case-Shiller home price index for the month of March, we had back in February 4.2% year-over-year appreciation, and in March came down to supposed to dip, and actually confidence went up. So kind of on the opposite spectrum of the consumer sentiment. Remember, we had a pretty sharp drop there, but consumer confidence actually went up in the month of May, so that's good news. And then new home sales, good news too, month of April. So back in March, we had a 481,000 new home sales. Forecast supposed to project up to 490 and actually came in at 517, so a nice surprising news right there. So overall, kind of a mixed bag right there, but overall pretty decent. Okay, stock market's down quite a bit. Why is that? Mostly due to there was a big over the weekend we had a big sharp increase in the U.S. dollar. After that CPI report, that core CPI, remember, it came up 0.3%. That spike in inflation. The dollar got a lot stronger. So against the yen, we're about 123 yen to the dollar. We're at about 109 when we were about 111 over last week from the dollar. So against the euro. So that kind of helped out. So the equity markets basically are putting money into the treasuries right now, and you're seeing a nice improvement in the treasuries. Also, yesterday, the Fed's Fisher, he had mentioned that he sees rates rising anywhere between 3.25% to 4% over the next 3 to 4 years. This is kind of seems to be the consensus with most of the. If you look at the dot plan from the Fed, that seems to be consensus. If you look at it, it's just rising probably like anywhere between low under at 1% each year over the next few years. They're projecting. So that would kind of be pretty close in line with where most of them are seeing, where they expect rates to be at over the next 3 to 4 years. Bond market's up. So as that money is being pulled from the equity markets or stock markets, it's coming back into the treasuries and mortgage-backed securities, which is helping out interest rates today. So we're seeing a slight improvement in our pricing for interest rates. So good news for people who are looking to refinance or buy a home. So obviously very good news here today. This week we do got a bit of economic news releases scheduled all throughout the week, so be prepared. This could quickly change one way or another. In some respects, because there's concern about the possibility of the rate hike. Bad news for good news for the economy could be bad news for the equity markets, which would be good for the bond market. So that money coming out of the equity markets going into the bond market, because it would be their way of being their tantrums about showing a rate hike, so to speak. So their withdrawals, it's kind of like a crack addict who's been being fed all this crack and then all of a sudden being kind of stopped. So they've been spoiled so long with all these really low interest rates that now that might be going the opposite direction. So and then of course they have to have the little like a little childish tantrums, so to speak. All right, folks, you guys have a great day. We'll see you guys tomorrow, and thanks so much for watching. Have a wonderful day.